Okay. Well, it's Thursday night, and we are getting to the end of our business week. Piet Viljoen, as always, is our guest co-host tonight. Jeepers, Piet, dramatic news last night. Well, certainly the media is telling us all about it. The fact that Jacob Zuma hung on just before midnight. He gave himself up.
End.
Yeah, the bitter end. And all of the people who'd been shouting that they would die before Zuma went to jail, well, clearly they dissipated, and it was a bit of a damp squib at the end. But I guess the whole news media was waiting and had late nights. And around the world, the reaction's been positive.
Yeah, and rightly so. I think it shows the Constitution has been upheld. Unfortunately, one could almost say surprisingly for where we are in South Africa today, but it's a good thing that was upheld. It's a good thing that the rule of law asserted itself. So good news. The market, however, seems to have discounted it because it hasn't gone up. It's actually gone down. It hasn't had any influence in the market at all.
So investors, traders rather than investors would take a long-term view, but traders anticipated that this was all going to happen anyway.
Well, to the extent that they had positions on in the South African market, I think what's happening in the South African market today was a bit of a sell-off in some resource stocks and the rand weakening a bit. Has almost nothing to do with Zuma going to jail or anything like that. It's more to do with a stronger dollar and what's happening in the US. I mean, it's we the tail and the dog is just wagging us. That's all that's happening.
You mentioned the US. Apple has again become the most valuable company on earth, $2.4 trillion, and the share price hitting an all-time high. What might be pushing it now, given that the antitrust drums are beating very loudly in Washington?
They are, but I think in the short term, what's happened in the US is that long bond yields have declined by over 20 basis points, which in value terms is quite a significant decline. 20 basis points from 1.6% to 1.4%, or even 3.5% is quite significant. So interest rates have come down, or long-term interest rates have come down. So the present value of the cash flows that Apple is going to generate over the next 50 years, which is what the market is discounting, has gone up by a lot because of that small movement in interest rate. So I think that's probably the simplest explanation for what is happening there, with the growth stocks right now outperforming and value stocks underperforming. It's due to the decline in the long-term interest rate, or the bond yield, so to speak.
But it feels like just the other day, it was probably a couple of years ago, that Apple broke through 1 trillion in market value.
Yeah, well, 18 months ago or so, wasn't it?
And now it's 2.5 trillion. You have to ask yourself, is this a direct reflection of the fact that there's so much money awash in the world right now, and the alternatives, as you say, would be long bonds at 1.35%. So Apple surely is going to grow better than that, buy it even at the high valuations.
I think there's some of that, and I think Apple is such a big part of any index, S&P 500, MSCI World, whatever index you want to call. There's a big flow of money into indices or index investing, and that money is buying Apple at any price. So that flow of funds is increasing, coupled with increased money printing by the US. Both those factors, I think, play a significant role in that. And also, Apple's fundamental performance. It is a good business generating good profits. Whether it's worth $2.4 trillion, that's a different argument, but it is inherently a very good business, and there's a flow of funds into it.
And we have seen recently that Microsoft have brought out its new operating system, its latest and greatest, and presumably to take on Apple, and Apple's just shrugged that off completely.
It's actually a fascinating situation. For all intents and purposes, capital for these businesses, Apple, Microsoft, Amazon, Google, Facebook, capital is free. They can get as much capital as they want for free, effectively. So they can effectively compete very strongly with each other, which they are doing in certain instances. And I think that will play out over the longer term, because these companies have generated high returns on their capital. They are good businesses. They are growth businesses. And that sort of attracts capital attracts competition. It's busy happening, and we'll have to see what that does to their inherent profitability going forward over the next 5 to 10 years.
When you say they can get capital for free, how so?
Well, if you are trading on a PE of, I don't know, 40 or 50, basically the cost of capital is 1% or 2%. That's basically for free. You don't have to jump over very high hurdles to generate a return, excess return on that capital. So capital is effectively free. Whereas if your PE is 5, like many South African companies, your capital is costing you 20% plus. So it's quite expensive capital.
PE meaning price to earnings, in other words, the
Price to earnings
multiple of
ratio,
this
yeah.
year's profits. So
Exactly,
in the case of these exponential companies, the investors are saying, we believe that you're going to continue to grow rapidly for decades into the future, which
yes.
In an uncertain world, is that unrealistic?
That would be my inclination. I think when capital is free, it gets misallocated. It gets allocated to projects with very low returns. And that is what you as a shareholder will ultimately earn, is the returns on these projects with low returns. Because the hurdle rate is so low, the returns these companies will generate will decline towards that hurdle rate over time. So yes, I do think that free capital leads to misallocation of capital over time, and it leads to low returns for shareholders on capital.
And hundreds of years ago, they used to call it the Dutch disease, when Holland was the wealthiest country in the world, but it wasted a lot of the money that it had on things like tulip bulbs. Are we seeing that happening in a way in America with meme stocks, cryptocurrencies, etc.?
There's no doubt there is a lot of speculative activity happening. Meme stocks, crypto, possibly SPACs, IPOs. There's lots of initial public offerings. There's companies that come into the stock market to list and being well received by the market. So there's a lot of that. So yes, I think animal spirits in certain markets, not in the South African market, but in the American market, animal spirits are very high because asset prices are quite high. So yes, that is very much the case at the moment.
But not in South Africa.
No, it's almost a converse. I mean, when last did we have a new listing in South Africa? I can't remember when we had an exciting new listing here. And many companies are trading in PE multiples of 3, 4, 5, 6. Good businesses are trading at very low multiples. So it's almost the opposite here. We're on the opposite end of the boat.
For good reason?
Yes, to an extent. I think it might, just like I think one can never be certain about these things, but I do think that investors are possibly over-optimistic on certain parts of the American market's valuation. I think they might be over-pessimistic on certain parts of the South African market's valuation. Should we be trading at a 50 PE? No, I don't think so at all. Should good businesses be trading at 4 or 5 multiples? No, I think that's too low. So as always, I think the truth is somewhere in the middle for both markets, the American market and the South African market.
Piet, I'm noticing something, and I'd be very interested to hear whether you've picked this up as well. It came through very strongly in 2 of the interviews that I had yesterday, one with Magnus Heystek and another with Russell Lamberti, that people in South Africa are gatvol, a good old-fashioned South African saying, that they've run out of giving the benefit of the doubt to the government, that they are tired of the state messing everything up, and that they are creating parallels to the formal economy or to the formal state. In other words, they're doing their own security, they're doing their own, individuals are living in their own bubbles and saying, well, we know that it's chaos out there, but at least within my bubble, within my area that I live, within the where my children go to school, etc., that I can control, that I can make safe. Doesn't matter what the municipality are going to throw at me. At least I can do that. But it's quite a radical thing, and certainly a step towards a failed state. Now, if that is even half accurate, even half correct, then one has to look at the share prices in the JSE perhaps from a different perspective.
Well, I think that's what people are doing. They are living in this environment where they have to do things for themselves. They're forced to do so by an incapable state, which is, unfortunately, we are governed by an incapable state, who happens to think they're capable, and that's probably half the problem. And so people are left to their own devices, and they're doing these things for themselves, and they're seeing that they can't rely on the government for anything. And that does lead to negativity. It leads to pessimism, and it leads to people being hurtful. There's no doubt that that is the case. You just have to speak to any of your friends. That is the case. But it also leads to resourcefulness, and a lot of companies that are listed in the JSE today are offering services to people who want to do it to themselves, and they're making money out of it, and they're creating alternative economies and alternative ways of doing things, and they are making a living by doing that. So, there's that aspect to it as well. I mean, education, some of the very successful stocks in the stock market are education businesses delivering a service where the government has failed a large portion of the population. Security services, health, all those things are happening in a parallel market. And yeah, I think it creates opportunity as well. So it creates pessimism, it creates negativity, but I think one should also look at the opportunities it creates.
It also prevents new entrants to a large degree, because foreign capital doesn't really come to South Africa, excepting today we saw an announcement that a foreign company is buying Imperial for big money, over 10 billion rands.
Yeah, I think 12 billion rand, and it's buying Imperial at a significant premium to the market price, which tells you what they think about what the market value, so-called market value, is of businesses. And I think it's not the first time. There's over the past year or two, there've been a few buyouts like that from foreign businesses coming in and buying cheap South African assets. And I think we'll probably see more of that going forward. There's no doubt we'll see more of that. In every crisis, there is an opportunity. In every setback, there is something to be done that is positive. And I think if one views the market and life that way, then one can start seeing opportunities.
Is it a case of South Africans being just too close to the fire, and companies like the Israelis who bought Clover, this latest acquisition of Imperial, foreigners looking from the outside in and saying, hang on, but we are seeing that things maybe slowly, but at least they've hit rock bottom?
Well, I'm not sure. I'm not sure things have hit rock bottom. They can always get worse. By no means am I trying to paint a rosy picture about our tremendous future that we have as a country, until the government can sort out the backbone of the country, the infrastructure, the supply of infrastructure to the country. It will be a hard place to do business in. It'll be a hard place to create jobs. It'll be a hard place to create services. So I'm not looking at the world with rose-tinted glass here, but what I am saying is that if your multiple is 5, a P of 5, that means your earnings yield is 20%. That means if you just stand still and don't grow, every year you earn 20% on your capital. That's a fantastic return. So you don't have to do much. You just continue operating the state you're in now. You generate a good return. That is how cheap businesses are. You don't have to put on your rose-tinted glasses and say, I think the government's going to improve. I think things are going to get better. Invest. I'm saying there are opportunities out there where you can have I'm not sure what the opposite of rose-tinted glasses is, but you can have those glasses on and you can still make money.
Well, let's hope that DP World, who are paying 12.7 billion rands for Imperial, are seeing something that many South Africans are not. But just to close off with, Piet, the move towards working from home. We've had information being distributed by Nedbank to its staff that it is going to have no more than 60% of its staffers in the office at any one time. So that's of a staff complement of 31,000 people. That's no more than 20,000 people in there, which means a heck of a lot of office space that's going to come onto the market. And if other banks and other corporates follow the Nedbank example, and I presume there's no reason why they wouldn't, what does that do to our in the property market, and B, what does that do to maybe the efficiencies of South African corporates?
Well, I think it's a global trend. It's not only a South African phenomenon. And I think we will learn how to be as efficient, if not more efficient, through portions of the staff complement working from home from time to time, and you can rotate that out, and certain teams can be at home, other teams can be at work, and rotate that. So I guess I'm saying you'll learn how to work with that, and I think we will claw back some of the efficiency we might have lost in this initial period where we're still learning how to deal with the issue. I think humans are quite capable of learning and improving over time. I do think the office market one can see some long-term negative revaluations happening for quite a while in the office market. I think that they do face trouble. But again, as with anything negative, there's positives. Just think how little less traffic there will be for those who are going into work, and how much more efficient your commuting time is going to be on those days that you actually do go into work. So that will in itself will increase efficiency. So, there's always positives to every negative. I don't think one should be too negative about that situation. I think it's a natural consequence. The pandemic has changed our behavior in many ways. And this is one of those which I think will turn out to probably be slightly more permanent than we might have expected initially.
Yeah,